Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm going to review crude oil in this video, talk about some crude oil stocks, how they impacted the markets, and why some key things have happened. First of all, US dollar index has gone up a bit. As you guys have already seen, the US dollar index has strengthened a little bit. Again, I'm not anticipating this to hold up for too long. But again, I'm starting to see people willing to bid up dollar, and the main reason being, and the main attribute of it, is the crude oil market having a sizable pullback, therefore implying inflation isn't going to be as bad. They're going to try and curb it, and US dollar index does like a sudden drop in oil prices apparently, so it goes up a little bit on that. Right now it is having trouble holding on to this trend line, but again, it would have to close for me. I would like to see a confirmation right below this 10-minute, and I'm not exactly seeing it yet. I'd have to wait for another 5 minutes or so to actually see a confirmation right below this trend line. If it happens, you'll probably see dollar index pull back a little more throughout the nightly session. Now, the crude oil market is getting a pretty strong bounce off of a weakening dollar, as you guys can go ahead and see. But I'm not too positive on stocks tomorrow still. I mean, commodities will probably have a decent bounce after having already fallen. I mean, like a $5 drop in crude oil prices is pretty major. One of them being is the Saudi Arabia issue. Saudi Arabia decides to say, hey, we're going to sell crude oil for much cheaper than the market price. Immediately, oil prices fall. And I want to point out to you guys the main reason why that's very important. If Saudi Arabia is selling oil for a much cheaper price than the market prices, that's pretty much OPEC. That basically means that these prices aren't supported at all fundamentally. There's no reason to be paying this much for crude oil. It doesn't matter what those people on the New York Stock Exchange floor think, or the NYMEX, or yeah, not the New York Stock Exchange. I mean the New York Mercantile Exchange. It doesn't matter what they think. Somebody else is going to sell it for a cheaper price. If somebody else is out there selling it for a cheaper price, nobody's going to buy it at a higher price on a different exchange. It just makes no logical sense. Another thing is that in Libya, a lot of these people not a lot of these people, but the rebels are able to sell oil. If you can sell oil out of Libya, that whole entire supply chain disruption issue is gone. Basically implying that a lot of this is just overhyped. I mean, oil cheaper from Saudi Arabia. Also, we have a surplus in oil production. We have a lot of oil stacked up. And, that being said, crude oil should definitely fall down for those fundamental reasons. However, I did anticipate crude oil to go up these last couple of days. And even touch 110, 114. But once that Saudi Arabia deal came through, that made the oil markets have a pretty sizable pullback. Along with that, if you guys look at a longer-term chart, super overbought. It was embedded for a little bit. It crossed right under that, slow stochastic did fall substantially in a short period of time. And we have a short-term downtrend in our trade triangle technology. Another thing that I do want to point out on the 5-day chart is a head and shoulder pattern. If you guys notice, head, shoulder, head. Very simple. Head and shoulder pattern right there. Classic move. Works generally a lot of the time. So again, head and shoulder pattern. Do I think crude oil prices could go lower? Yeah, I think they could go lower. And again, there was a pretty major impact on the stock markets, as you guys can see, throughout the 10 a.m. opening and 4 p.m. you see a pretty major pullback. And the main reason being is very simple. Oil stocks on the Dow Jones Industrial Average and the S&P 500 fall substantially on crude oil, coming down, crashing on them, and therefore any oil stock in the oil space is going to fall. And it fell, and it basically made the S&P 500 and the Dow Jones Industrial Average relatively weak. And the main reason why, if you guys look on a 5-day chart, why Friday you have this major sell-off, this huge spike in oil. This time, the Dow Jones Industrial Average and S&P 500 have a huge fall on a huge fall in oil. So, either way, a huge spike or a huge fall, it doesn't matter. Markets hate either of them. Why? Because if the price of oil falls suddenly and drastically enough, oil stocks fall drastically, therefore having an impact on indexes. Computer algorithms react to those indexes, therefore selling stocks in their portfolio, even if it's not related to energy, and even if it's not related to the energy space, therefore causing stocks in general to fall in value. Okay, as far as why people hated oil when it suddenly gapped up on Friday, if you guys noticed, Friday it just it goes higher throughout the day. Why? Well, why do people hate it? It's because markets hate that. Because if 1 week you're spending $70 per gallon or $70 at the tank, a week for gas, all of a sudden, and last week you were paying $50 per week per gas, people start to start spending less. They try to eat out less, they try to do less, and they try to be more conservative with their money. And basically, that's kind of what you're seeing. So if that happens, that's really bad for the economy overall, and it really damages and it sucks the life out of the economy. Now, if it's like let's say a gradual increase in price for crude oil, like we've seen in the past, people tend to not really care. If it's a gradual increase, you see crude oil inch up by 50 cents, maybe 20 cents per day. People tend not to notice as much because they're probably paying maybe 2 cents, maybe 3 cents more per gallon every single week. Is when the price of crude oil jumps up by 20, 30 cents in a single week. That's when people start to freak out, and that's when they stop spending so much on crude oil. Now let's go ahead and review some key stocks in the oil space. Chevron had a pretty major pullback, and this is one that's just clear as day. I mean, if you guys look on the crude oil chart, if crude oil pulls back, therefore you should also anticipate crude oil stocks to pull back as well. And I do anticipate this crude oil market to continue going lower as well. And next, ExxonMobil. Pretty strong pullback. ExxonMobil has been relatively weak, and I haven't been too I haven't been too bullish on the oil market. In fact, I'm not too bullish on oil stocks right now. And I think ExxonMobil could probably go a little lower as well. British Petroleum, I have been pretty positive on this, but I have to change my outlook on it now. And I am back to being, a cautious bear. I'm not going to short it or anything, but I'm certainly not going to buy oil stocks at these prices. If you guys look on the 1-year chart, oil stocks, high prices, oil stocks, high prices. Again, I'm going to be very cautious, and I'm going to be very honest with you guys. I think that you guys should avoid oil companies in general. Alright? And also, if you guys look back, let's go ahead and review the short term. US dollar index might get a bid, and it hasn't, you have one candlestick, but the following candlestick is trying to get back above it. Again, you'll probably see, the US dollar index continue to go lower. You'll probably see a pretty, a decent bounce in crude oil. But again, you'll probably see some resistance at the 200-day. Right here, and you're gonna probably see the crude oil market try to regain some of its lost footing, but it will probably continue going on a downwards trend. All right, that does it for me for today. Remember, crude oil, stay away from the crude oil stocks. Be cautious. No fundamental reason to buy them. Saudi Arabia has come out swinging their fist. OPEC has come out swinging their fist. And again, you just don't want to have exposure to these crude oil markets at this point. I would be neutral to bearish. Alright, anyway, that does it for me for today. I'll have more for you guys in the coming weeks and months ahead. If you want to use the charting software, check out the link right below this video. And if you guys like this stuff, be sure to subscribe to my YouTube channel. Take care, folks.